Hey everyone, this is Mark from Stocks and Cash. It's March 19th, 2018. Here with your market update video, talk about my holdings and some potential trade setups for tomorrow. Just want to apologize for not getting a video up yesterday. Life kind of got in the way over the weekend and time slipped away and wasn't able to get anything up. So I will take it from where we ended up on Friday and talk about today's candles. So Friday we had a down day. Similar to what we'd been seeing most of the week, and we stopped right at support. So there was some, I don't want to say hope, but there was some indication that we might hold these levels. We closed within the gap that was filled on Friday, but today we opened down and trended down most of the day. However, the last hour or so we saw a rebound and we closed above this level here of around 270. So let's take a quick look at the daily action. Oops, sorry. So here is today's open. You can see we gapped down from Friday, and it was pretty much a descending day for most of the day. We did kind of get a double bottom here. You know, between the hours of 1, we put in a bottom, came back up, came back down and tested it around 2 o'clock. And then for the rest of the afternoon, we kind of trended back upwards. So not the worst end of a day considering how rough it started, but there is some cause for concern, of course. Now, we did come down and test our 100 simple moving average. We didn't exactly touch it. The low was 2682, and the 100 is at 2684. So again, we didn't quite touch it. Came very close. You don't have to touch the moving average to bounce. I mean, it's not like a gap that tends to fill. So the fact that we bounced off of the 100 is encouraging, but I do see this rising wedge type pattern trading, which can break out bearishly. So I would expect the next few days to be bullish. Maybe not huge, but I don't think we're going to push down below this ascending trend line in the coming days. Now, I could be totally wrong and we could push down and break right through. But if this pattern is going to play out, I think we have one more gasp up to the top here, maybe fill this gap finally, and then I can see us coming down and breaking this level and retesting our lows here on 2.9. I'm not saying that's going to happen. It's just a potential play that I could see playing out for the reasons I just explained. So there's certainly a lot of indecision in the market right now. Volatility is up. You can see MACD is crossing over bearishly. Stokes are bearish. RSI is bearish. That could change with a bounce here, but I'm not counting on it necessarily. So I'm not just going to start buying calls and saying, oh yeah, well, we stopped at this trend line and we're just going to keep going up. What we saw on Friday and into today is a good example of, hey, just because we landed or closed around support doesn't mean that we're going to bounce. The bounce has to actually occur. Buyers have to come in, and if that doesn't happen, then the support level can fail, which it did here at 274. So again, we're back here. Our close was 270.50, so we're down about $3.50. Quite a big loss for a single day. I think it was around over 1% down, and volume was, pretty decent, certainly above average, as you can see. So I am not planning on buying any calls or buying any puts. Now, if we come down and close below this 100, I think there's a lot of room to run down. This would act as support here at the 3.2 or on 3.2, but then I think we would come back and test 2.9, these lows at 250 or so, 252. So let's keep an eye on what the market does. Again, my impression is that we'll come back up, fill this gap here. This is the gap I'm talking about. Get rejected and come back down. So I think we have some bullishness left in us before we go down and retest those lows, if we retest those lows. But again, right now I think our move is a little extended. We've had 1, 2, 3, 4, 5, 6 down days in a row. Not that that necessarily means anything. We could have 10 down days in a row, or 11 or 12. But, you know, typically when you've had all these down days and you've stopped at support, you bounce. And once again, it didn't happen here. Let's see if we bounce off of support here. Let's take a look at the Qs. Pretty large sell-off today. It left a gap that was formed between the 8th and the 9th. We had a gap that formed between the 16th and today, the 19th. We pretty much bounced off the 55, but and volume was pretty huge. So, you know, I don't know that the Qs will necessarily follow what the S&P and Dow do. You know, this could be like an island reversal / blow off top type pattern that we're seeing in the Qs potentially. I may have that jargon a little messed up. I'm not sure if a blow off top is a, well, sorry, if an island reversal is really, you know, a bunch of candles or if it's just one. But the fact is we have two gaps in the same spot that we'll need to fill at some point. But, you know, will that happen this week? I don't know. We are below the 21. We're above the 55. But you can see MACD is rolling over, and the indicators are looking pretty bearish. So unless we have some kind of, you know, buyers come in and buy this dip, then it looks like we could continue on downward. So let's take a look at holdings. The only thing I'm holding right now is First Solar. First Solar had a rough day on Friday. It kind of exploded out of the gate. Came up and touched this high of, let's see, 72.37. And then for the rest of the day, it just kind of melted down very slowly, very methodically, but ultimately it came back down almost to where it opened. So disappointing day on Friday, but today we had a nice green candle. So the First Solar trade is working out. Here's the first target, 74.34, and then ultimately I'm expecting us to come and touch this ascending trend line, which you can see, you know, it'll take a lot for stock price to catch up to that. You know, it's going to be moving this way. This is still going to be ascending. So, you know, we don't have to hit that level, but and that would really be an ultimate target. You know, hitting this ascending trend line. A lot can happen in between, but I do think First Solar is looking pretty strong, especially in the midst of a weak market. It can kind of sustain itself, so I'm liking the looks of this trade. So for some potential trade setups for tomorrow, now I know this is going to potentially go against what I just said on the SPY, that it could bounce and go and fill that gap at 280 in the coming days before going bearishly, but the trades that I have are bearish. So let's take a look. So Halliburton, we put in a low here early in March, kind of came back up and tested the 21 EMA, got rejected, and now we've closed below this fib retracement level, this low that was put in on 2.9. So I think there's a lot more room to go down on Halliburton. We're sitting at 44.68. I can see targets of 41.74, and then maybe 37.34. You know, with some stop, or I should say some support at these levels from the 26th of October and the 27th, 28th of November. So why don't I draw that? So that almost coincides with this first Fibonacci target at 41.74. So we'll see what happens with Halliburton. A couple more. Let's take a look at COG, C-O-G. So let's zoom back out. You can see that we had this ascending trend line. It was breached. It closed back up above it, and now it's breached again. You know, we had kind of a double top here. This looks like an ABC type correction. So we had a double top. This looks like the A, the B, and the C could come way down. So I do think there's a lot of downside on COG that could pay off for us if we get in bearishly. Now there is this support level here that's just below where we're currently sitting, so you got to be careful of that. That support level coincides with these candles here, and this one here on 1026. So, you know, we broke through it pretty easily on the, well, on the 7th. The 9th we put in our low, and then we kind of came in, the support level acted as resistance. We broke through it, and then it acted as support. So this tells me this is a pretty reliable price point here on COG. So that it's possible that we could bounce here, or if we close below it, then it could act as resistance. So it'll be interesting to see. Now the indicators are pointing bearishly, of course. So if we go by that, and the fact that we've just kind of gapped down on COG, I think there's a lot more room to go down, provided that we get through the support level here. And lastly, PepsiCo, pretty similar to chart to COG. You know, we didn't have a traditional double top like we saw in COG, but you know, we came and hit a high and just trended downward like we saw in a lot of stocks in that early February time frame. We were looking for support here at the 21 and 55, sorry, the 21 and the 8 EMA. It broke, and now I see some potential targets. First target would be 107.15, 102.97, and then 97.57. So certainly a lot of room on PepsiCo to kind of run down. So we'll see what happens there. That's about all I have for tonight. I think the markets are kind of, again, in some indecision points based on the buying that came in at the end of the market. It's kind of interesting. You know, we may see a green day, a green candle tomorrow. And again, I think filling that gap is a possibility, not necessarily this week, but once that gap is filled, I think that's going to end the wedge, and I could see a lot of bearishness at that point. So let's see what happens, but for now, those are the 3 stocks that I'm interested in potentially trading tomorrow, depending on what the overall market does. If you have any comments or questions, please feel free to leave them. Otherwise, have a great night and good luck trading.